Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 30, 2015. Inside the numbers tonight, we're going to take a look at the Intel and the Qualcomm trade real quick. We're going to look at the SPY and the E-mini contract, or the S&P 500 as a whole. We'll do crude oil, we'll look at gold and the GDX, and we'll look at interest rates in the bond market, and then we'll give it a wrap. Okay, so let's look at Intel. This is the hourly chart. So remember last week, on Thursday we bought Intel, Friday it popped up, and now today it was pulling back a little bit, or just working off some of that overbought condition. There's nothing wrong with Intel. I think there's higher prices coming. But now I want to switch over to Qualcomm for a second, and I want to show you something, because you can see that, look at this pattern here, okay? You see where the stock made a bottom on volume, okay, reversed up, and then we issued the trade alert over here, okay, waiting for higher prices, okay, and now we're getting higher prices. Now, let's go back to Intel for a second. Same pattern. You see this down here? So these weren't the only two stocks in the semiconductor and related industries. Intel and Qualcomm aren't identical, yet they move together. At least they were this day. And when I saw the same pattern developing, and I saw others in the same industry group also developing, these two were the best patterns. And so instead of just one, I picked two, and we got lucky with Intel having that announcement and popped up on Friday, or I think it was at the end of the day, Thursday. Either way. But what happened was, when we bought Qualcomm, okay, under the same conditions, all right, we're getting the same result. It's just not going in the same time frame. But you see how it's moving in the same direction, higher, just as Intel did. Intel just moved faster, but it was always going to go to that number at some point in time. So that's what I just wanted to point out, that the same pattern means we took two trades instead of one, and we get double bang for our buck, because Intel pulled back today, but Qualcomm was up. So we're in good shape there. Okay, let's go to the spider chart. And today we had a nice big up day. Market gapped up at the open. It was up overnight, and it just got stronger throughout the morning, and then it gapped up and then basically floated higher for the most part all day long, except we'll just take a look at the intraday, or the 10-minute chart. You see this little sell-off at the end. Normally on a day like today, you get a lot of sideways going on between, let's say, 10:30, 11, 11:30, and like 2 to 3 o'clock. And then all of a sudden, the market generally makes another move higher on days like today. And we didn't see that buy program come in from the computerized trading and the prop desks and the institutions and all that stuff and the high-frequency traders. What we saw was the opposite. We saw a little bit of a pullback into the close. So what that tells me is nothing really wrong with the market here, but what it tells me is that we're probably going to pull back in the morning, and I've done some calculations, and I'll show you where I'm looking at. I'm going to go over to the E-mini to look at it, because this is where the number comes from. So I'm looking at about the 2065, 2066 area to pull back in the morning, okay, and do a test. Now, what does that mean? So that means that if we close hourly above that 2065, 2066 area, okay, and we don't close below it, convincingly at least, don't close below it throughout the day tomorrow, so that would be a pivot number, and it would remain bullish above, bearish below 2065, 2066 in the E-mini contract. So if we go over to the spider and we want to try and isolate a level, what level would that be? I'm going to say it's down in the basically in the 207 camp. 207, 207.25, in that neighborhood. This is going to be your area that you need to be aware of for tomorrow on Tuesday, bullish or bearish, above or below on an hourly closing basis. Now remember, hourly in terms of the market is on the hour of the market hours, not necessarily on the hour of the day. So since the market opens at 8:30 for the futures, 9:30 for the cash markets, we're going to use the hour. I always use the hour, which is the hour from 8:30. So it's 9:30, 10:30, 11:30, 12:30. So it's on the half hour is the hour. And I know that skews a little bit because there's a half an hour extra during the day, but that's just the way it works. So if you're counting hourly closes, your first hourly close is 10:30. Okay, so 2065.66 in the E-mini, 207, 207 and a quarter. Got to stay above that tomorrow to remain bullish. Any test of that area and a good close hourly above it could be bought because that's a bullish sign, and I think we're still going to see higher prices anyway. We just may see a little bit of consolidation first. Don't forget we have a holiday weekend, and normally the market floats up into a holiday weekend, and this is a bullish part of the year anyway. Okay, so let's look at what do we have next? Anything else I want to discuss in the market? Let me see my notes. Nope, think I got it. So let's go over to gold. And this is the April contract. We're going to shortly switch over to the June contract. Right now they're trading, I think, about the same price. I'm checking my other screen here. Gold June. Yeah, gold June is it's actually like 50 cents higher at this point. But I think tomorrow I'm going to switch over to June. And so we'll still talk about this one. And basically, let's go over to the daily on here. And you'll see that we're beginning, or we're in the middle of the pullback that I said would happen. We hit the target. Now we're pulling back. There's nothing wrong here. This is normal activity. And like I said, we're going to look for 11.75, give or take $5. We actually took the $5 today, meaning the market went down to, I think, 11.81. Where was the low? Low was 11.8160. So we're close. I mean, there's not that much more downside in the gold market, I don't think. We're probably going to come into this 20-period moving average over here within the next day or two, and then I would look for more upside momentum to play out in the gold market. Remember, when we see corrections, right, we saw an up move. Now we're seeing that was an A. We're seeing a B pullback, and then we'll see a C rally, and the C rally will bust through the highs here, and we'll keep going for a little while. And our first target there is going to be about 1240. So if we're looking at the GLD contract, here's our line in the sand. We're going to be buyers at this green trend line that goes across here from this pivot high, a little over $13. This line is 1320, 1319. In that neighborhood. So we don't have much more downside, I don't think. If the market closes convincingly below this area, then maybe something else is developing, and we'll have to take a look at it there. But this is what my work is telling me now, so I'm going to go with that until the charts tell us something else is developing. So GDX got pulled down a little bit with gold today. The price of gold goes down. The price of GDX went down. Sometimes it'll trade with the stock market, but today it traded with the gold market. And same thing applies. I mean, if you want to be long GDX right now, you can be long with a stop below, on a closing basis, below 1771. So that's a pretty tight stop. That's about, give or take, 80 cents in that neighborhood. If you want to do that. But the real stop is a close below 1729, but that might be a little bit far for some people. So you have those two options. Depends on your risk tolerance. But I think once gold takes off, GDX is going to take off as well. So you're seeing the A move, the B, and then the same C corrective move should be coming. And I think we're going to head up to the 22 level in GDX as long as gold can get some momentum behind it and starts moving higher. Okay, so let's go over to crude oil. And crude oil is interesting because we came up into this channel here, like I said, and we tested it, and then the channel basically said no thanks and reflected gold below the channel. So we were here. I said we would come up and test the underside of this channel. We pierced through the channel, and we failed getting through the channel. You would need to see over here a close above this day, which was 52.48, in order to get to the top end of this channel. Didn't happen, so that's a failure, and now we went to the underside of this channel. But, okay, just like the stock market, look at this. A, B, And is there a C coming to the top of the channel? That's very possible. Why do I say that? Because tomorrow is the close of the month, and obviously for all markets, but I'm looking very, very carefully at oil. And at the way oil traded January, February, and March leads me to believe, and I've done a lot of calculations, I've done a lot of trend lines, I've done a lot of daily, weekly, and monthly charting, and the conclusion I came up with is as long as we can stay above, on a closing basis, $47, okay, this market may get back into this channel and test the top end, which would be roughly about $56. Now, that's not a guarantee. I don't have an indication that, for example, tomorrow or Wednesday is telling me higher prices are coming. I don't have it yet. Okay, but I may get it shortly, but I do know this, as long as we remain above on a closing basis 47, the odds are in our favor that higher prices are coming in the crude oil market. So that's the best I can do today, but that story will continue to get better the longer we're above $47 in the price of May crude futures. Okay, so hopefully that's helpful. Let's go over to the bond market, and we'll look at TLT. And remember, I took TLT off, and I said that we may have higher prices, but I think we're pulling back. And that's why I took it off, because the probabilities were diminished that we were going to see higher prices immediately. Okay, that's not to say we won't see them, but immediately I'd rather be out than have more of a 50-50 probability that higher or lower prices were coming, and I chose out. Therefore, I'm going to wait for the market to develop longer, the pattern or the chart pattern to develop longer before I take a position back. What I think is developing is I think we're going to see lower prices, and I wouldn't be surprised to see TLT down at 125, 126 before we were ready to see higher prices again. Remember, A, corrective, A, B, pullback, and if we keep going back, maybe into or through the 20-period moving average, and then C, higher prices. So that's kind of what I see developing here. Again, like crude oil, I don't have anything definitive, and plus, this is in the middle of the range. Here's your top end of your range, here's the bottom. When you're in the middle of the range, the readability of the chart becomes less comfortable to have a high percentage probability of a winning scenario. So right now we're going to step aside and we're going to wait for the TLT to develop further, and then we'll step in at the right time. Anything else we want to look at? Well, we'll just take a look at the dollar. I just eyeballed it, so why don't we look at it? Dollar went up today. We're looking to get it inside this zone. We almost had it the other day. We just didn't quite get it. Maybe we missed it, maybe we didn't. But we're going to look for another drop into the zone. But right now, imminently, I think there's higher prices coming in the dollar. I wouldn't be surprised to see higher prices tomorrow and Wednesday. We're probably going to challenge this area here at about 99. And, well, it's not that much farther up. It's still higher prices in the dollar. That's what my work is telling me, the probabilities in favor of higher prices in the dollar over the next day or two. Okay, I think we're going to give it a wrap there, folks. Hopefully it's been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.